Well, gold had quite a volatile week, driven by weak economic data out of China and rising oil prices. Here to help make sense of it all is Daniela Cambone, the editor-in-chief of Kitco News. Hi, Daniela.
Hi, Scott.
So let's show people what happened to gold this week. We have a chart to show a lot of price swings. We're on track for our third straight week of declines in gold. There you see it right there. What happened this week?
Well, a lot happened this week, and hence the ups and downs. We saw gold get some reprieve following the negative data coming out of China, so we saw a bounce back there. So it's not all bad news for gold, though. It has managed to hang on to the key support level of 1250. We did see it briefly dip below 1250 earlier Friday morning on the back of some positive retail sales, but it gained momentum following the University of Michigan's consumer sentiment, which showed that it's at a yearly low now. So we did see gold get some bounce back, but as you mentioned, it is headed for its third weekly negative loss here.
All right, but the issues we just talked about are more short-term factors for gold. The big thing for gold right now is the Federal Reserve's looming rate hike. The markets are now looking at December.
Right. So yes, gold is showing that it is extremely data sensitive, but the elephant in the room remains the Fed rate hike. Now the market is pricing in a close to 70% chance that we will see a hike in December, and that's putting pressure on the gold price here.
All right, now aside from the Fed, investors are also worrying about this so-called hard Brexit, where Britain would have very limited access or even no access to the EU single market. Why is that so important?
Well, it's extremely important for the gold market because we saw what the Brexit bomb did for gold earlier in the summer. And should we have a hard exit where the UK plans to start this divorce process sooner than the market expects, well, that would bode well for gold because basically we just push equities over the brink here and we would see investors flock back into the safe haven of gold.
All right, now looking ahead, next week we have an ECB meeting.
Yes.
And of course, whatever the ECB does could have implications for the Fed.
This could be a game changer because when reports started coming out that the ECB was looking to end their bond buying program, that caused gold to hit a 3-year low.
And that was just a rumor.
And that was just a rumor. Now, if at the meeting these reports prove to be true, we could see additional pressure on gold. If these rumors or reports are put to rest, we could see gold really bounce back here. I was speaking with Jessica Fung over at BMO, who really, explained it well. She said if we sum up the gold market or break it up into threes, right? Japan, US, and Europe. If we see the ECB planning to extend their bond buying program, then we could see gold recover 1/3 of the losses here.
All right, we'll be watching. Daniela Cambone from
Absolutely.
Kitco News. Thanks for joining us.
Thank you, Scott.